from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, meme stock mania is back. Bed Bath & Beyond surges in defiance of Wall Street as retail investors get a second wind. I'll chat with the CEO of StockTwits about how social media is impacting market moves. Plus, you know who else is back? Adam Neumann. Yes, the WeWork founder who lost billions for investors in one of tech's most spectacular flameouts. He's just raised money yet again, getting the biggest check ever written by Andreessen Horowitz. Silicon Valley's water cooler is all abuzz. We will take you there. And big tech companies like Microsoft and Amazon have pledged to go green. But critics say they're also helping big oil prolong the fossil-fueled age. We'll tell you how. But first, let's get a look at the markets and stocks shaking off a tech slide as investors buy the dip. Bloomberg's Christina Aquino joins us now with more. Christine?
Well, Emily, it's another classic summer trading day today. Low volumes, not a whole lot of big moves. But let's take a look at the NASDAQ here. We did see some whipsaw price action today. It did take a dive in the mid-morning session, and it looked like it was about to claw that back and come back in the afternoon session. Not enough, though, and we're seeing it just finishing higher on the day here, up more than 2.6% here. And also some good news from big tech today from the 13F filing season. We did see a lot of investors piling back into some of these big tech names in this most recent reporting season. You know, that's really a sign that some of those massive declines that we saw in the first half of the year finally making some of these big tech name stocks cheap enough for investors to buy. But it is still a bit of a mixed bag today in terms of price action. We see Amazon and PayPal finishing the day higher here, but Alphabet and Apple a little bit lower on the day today. But you know who's having a good day, of course? Bed Bath & Beyond and the rest of the meme stock complex. Bed Bath & Beyond, of course, standing out today with a whopping 29% gain on the day. That triggered several trading halts as investors really piled back into the stock. I know that we've seen about $99 million worth of buying into the stock over just the last few weeks. And if you take a look at the year-to-date gains here, that's up more than 82% now this year. Definitely a far cry from the S&P 500's 9% decline here, Emily.
All right, Christine, thanks for that. Let's take a look now at a 3-week chart of Bed Bath & Beyond. The stock up 400% despite at least 3 downgrades on Wall Street. Shares were halted after spiking this morning, a sure sign the meme trade is alive and well. I want to bring in Rishi Khanna now, CEO of StockTwits, a social platform for investors. So Rishi, curious what kind of activity you saw on StockTwits ahead of this surge.
Hey, Emily, thanks for having me on. Yeah, so we saw, kind of at the end of July, beginning of August, we saw Bed Bath & Beyond rocket up to, on the top leaderboards in terms of activity. So since August 1st, it's been second only to AMC in activity. And, historically over the last 6 months, Bed Bath & Beyond has not cracked the top, 10, 20 or so. And also since August 1st, we've seen it grow its followers by 33%, approaching 50,000 followers on StockTwits. And I think the most interesting thing also has been the StockTwits social sentiment over the last, 4 or 5 months since about April has been mostly negative on Bed Bath & Beyond. And then there was a spike in early July in its sentiment. And then since August 1st, it has moved to an extremely positive position and has maintained that position. And you kind of see that correlated with the run up in price, from the $5 that it's been at for most of the last, 6+ months to, I don't know where it closed at today, $20, right? 20, 25. So we've seen a lot of really interesting activity and activity that started in July on the Bed Bath & Beyond side.
So here's the question. Why? Why are retail investors on this train?
Yeah, I think, there's a couple factors, and Bed Bath & Beyond is probably an interesting one. But overall, meme stocks have, we've seen has seen less capitulation in the retail markets than some of the other ones. So AMC has maintained its position. GameStop has been steady, and so the interest there from the retail world has maintained better than some of the other stocks. Bed Bath & Beyond, I think there's probably a lot of factors at play here. There's the short interest report that came out at the end of July. I think the Ryan Cohen news, obviously yesterday, was probably a big catalyst and factor. And in the summer we've had, generally speaking, low volumes, and so I think all these pieces come together, and retail definitely still seeks out these kind of opportunities. Retail traders and investors seek out these opportunities of dislocations, whether it's short interest or just price movements. And Bed Bath & Beyond has been the beneficiary as a stock over the last 3 weeks, I guess, right? So,
can you talk a little bit about the power of Ryan Cohen in particular? Obviously, he's the chair of GameStop, which is sort of the original meme stock. But how much of this is driven by him, and how much of this is truly driven by general retail investor sentiment?
I think definitely in the retail trading community, the Wall Street bets community, the kind of a meme stock community, Ryan Cohen seems to have some pretty significant sway on the markets. I don't know personally. I can't speak to anything of that nature. But I think if you look at when he takes positions, the markets move, right? And so the move we saw today in Bed Bath & Beyond, after already a massive move, can probably highly be attributed to the news that he took, the out-of-money call options. I think that came out last night or this morning or whenever it did. But so, he's an interesting person in this place. Obviously, kind of first with the GameStop, but has made a lot of moves over the last 18 months that have definitely been followed by the retail community and the investing community. So, I think you can't ignore what he does, at least in short-term bursts.
In general, we're hearing, we're seeing this talked about on Reddit. We're seeing this stuff talked about on Twitter. What would you say the role is of social media in stock market movements these days?
I think the role of social media and, kind of social platforms in general is, we do disseminate, information quickly. We allow, kind of the communication and sharing of ideas. And I think, the ability for retail, especially to, kind of communicate, in some extent they've organized in the past, right? Like as we remember in the kind of the major meme stock moment of 21. And I think, social media has a strong role to play, and, platforms like StockTwits to, kind of give retail a place to learn, to collaborate, to share, and ideally to kind of do it in a way where they profit from it and they learn in a positive way. So it's a powerful tool. I think it can be used for good and bad, and but there's a lot of education and learning and partnerships that kind of come out of it from a community perspective, I think.
Any regulatory concerns for StockTwits at a moment like this?
Not so much. I mean, we have our house rules and stuff, but those are our rules, and we cooperate where there are issues potentially on the board. We do know obviously some of the bigger agencies like the SEC and stuff are paying attention. But no, I mean, we don't see any massive regulatory issues along the lines of social media. Not in the current kind of environment, I don't think.
All right, Rishi Khanna, CEO of StockTwits, thank you for joining us on the latest addition to the meme craze. All right, coming up, Silicon Valley's best-known venture capitalist just wrote its biggest check ever to controversial WeWork founder Adam Neumann, sparking an outcry about yet another tech guy failing up. This is Bloomberg. Why do you feel so much rage?
Yeah, so whenever something big like this comes out, a big funding round, a lot of underrepresented founders, particularly women, people of color, are asked why the outrage, why do you have this emotion? Well, it's because only 2% of VC dollars go to women, 2% go to Latinx founders, 0.67% go to Black founders, and there are less than 100 Black women total who have raised more than $1 million in VC funding. That's the outrage. It's visceral. It hits you. But then it also quickly becomes a muted rage because, as I tweeted, it is expected. It is not a surprise. We are used to it. But you have to feel that rage when you are part of that community that is just historically blocked from accessing this funding.
That said, we reached out to a lot of female investors today. Privately, they feel like you. Publicly, they don't want to talk about it. Why do you think that is?
Well, it is really difficult to talk about in any industry where you are marginalized or where you can have repercussions for speaking out. It can be a scary thing to do, right? There's risks. There's risks to my business. There's risks to those who associate with me when I am outspoken. But I also really believe that in order to have any kind of change or awakening of these reactions within other populations and segments, you can do something about it. You have to talk openly about it. And to me, it's just a clear choice. And the community that comes around it and opportunities like this that come from it is how you catalyze public discourse and really make a change.
So here's what Mark Andreessen wrote about this. He says, Adam is a visionary leader who revolutionized the second largest asset class in the world, commercial real estate. Adam and the story of WeWork have been exhaustively chronicled, analyzed, and fictionalized, sometimes accurately. We understand how difficult it is to build something like this, and we love seeing repeat founders build on past successes by growing from lessons learned. Taking on Andreessen Horowitz, Allison, is bold. I mean, you might never get a check from them. Why take that risk? Okay.
I honestly, what this signaled to the world, and particularly to underrepresented founders, again, only 2% of females have 2% of VC dollars go to women. I don't think I am getting a check from them, but also it signals that their check is not for me. Unfortunately, it signals that venture may not be for many founders, and that's just not true. But you do have to be intentional and realistic about where you put your time as a founder if you want to build a successful company, and intentional about whose money it is that you're taking. For me, ethics, business ethics, and competency and honesty are paramount, along with the viability of the idea of my business and the difference that I want to make in this industry. I do not want investors who don't believe in that. I do not want an investor who clearly says, it is okay that you overstated yourself and your business. We're still going to write you a check. We're ignoring that, to the exclusion of others who have more viable business ideas and better business ethics.
You allude to that in your tweet where you say founders value your time. Getting a meeting does not equal getting a check. Choose wisely. You also told TechCrunch, you could be mad about this all day long, but you have a lot of other female founder you know what to do. What do you mean by that? I assume you're talking about all the extra burden that comes with being a female founder. What's all this extra female founder stuff?
Yes, of course. I think it's that sentiment again. It's that muted rage. It's the known element for anyone who is on the receiving end of this, that this is how it is. And if we're going to run our businesses, we have to run our businesses. It is harder for us. The numbers don't lie. We do not get the funding. We do not get the resources. We do not have the access to the networks. Our metrics that we are assessed by for signals of growth and potential are much harder than others. And this goes for women, but also a lot of other underrepresented groups. And you just have to keep going. I don't have time. I don't have time for this to consume my day. I'm building a successful business and I'm going to earn a profit for my investors. So yeah, I have my bleep to do. I got to go do it.
Let's talk about that. Your company, Scroobius, helps companies, helps people with their own pitching. What's your big idea?
Yeah, so thank you for bringing up Scroobius. So our company is 2 years old. We're a startup too. It stemmed from my last experience where I did successfully raise 10 million for a startup medical device company that I helped launch and co-run, where I experienced extreme gender bias during the fundraising process. So with Scroobius, we are productizing what you would get from working with a pitch coach or having access to resources that teach you how investors think, so that you can present yourself as investable. Because if you have been traditionally blocked from accessing those resources, whether by network or whether because of funds, because those are very expensive things to access for quality material, you don't know that you are not presenting in a compelling way. It is not intuitive to understand how investors think. And then on the other side of that, we are building, not yet launched, we have launched that founder side, a data-driven way to curate in a hyper-curated way what investors see so that it will speak to them and what they want to write checks to, both the idea and the person, which is where we need the checks from at the early stage.
A few other stories we're watching. Coinbase shares fell as much as 7% today after announcing in a blog post that it will temporarily pause new Ethereum and ERC20 token deposits during the merge. It is a temporary precautionary measure. Ethereum anticipates the merge will be completed on or around September 15th. And after a number of delays, Apple has set a September 5th deadline for its corporate workers to be in the office at least 3 days a week. COVID surges delayed the company's plans multiple times. Apple has been making other COVID-related adjustments. It's also dropped its mask mandate in office common areas. And according to people familiar with the matter, Apple has laid off many of its contract-based recruiters in the last week. About 100 contract workers fired at the world's most valuable company were told these cuts were made due to changes in Apple's current business needs. We reported last month the company was joining many other tech firms and hitting the brakes on hiring. And coming up, how big tech is helping big oil pump more fuel, what that means for their pledge to transition to a greener future. Next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. President Biden has now signed the $750 billion healthcare, climate, and tax bill into law, capping more than a year of negotiations as Democrats head into midterms this fall. Known as the Inflation Reduction Act, the bill aims to reduce inflation while encouraging greener industries to develop. And big tech has been vocal about wanting to go green for some time now, except big tech has actually been helping big oil make more profits than ever. Let's hear more about how. Bloomberg's Mark Bergen, who covers Alphabet, joins us now. So, Mark, is there some hypocrisy here, I sense?
That's certainly the criticism from both from outside environmentalists and then from even employees of these companies. So Microsoft actually has been the leader in the energy market, followed I think closely behind by AWS and Amazon. These companies will say and have said multiple times that the reason that they're partnering with the oil and gas industry is to help them with the energy transition to clean, renewable sources, sort of low carbon. We started out this report to sort of interrogate that idea. It looks like so far a lot of the work has been on their existing oil and gas production, whether that's making that more efficient. And in some cases, the oil and gas companies say they're lowering the carbon footprint of those operations. There's certainly evidence that they haven't slowed down oil production, and especially now when you're seeing gas prices have been so high this summer, there's political demand for the oil companies to be producing more. And the cloud companies are really have this powerful data assets that let them do that more efficiently.
I recently spoke with Thomas Kurian, the head of Google Cloud, about Google Cloud's deal with Saudi Aramco. Take a listen to what he had to say.
We work with their system integration division to provide our technology to customers in different parts of the Middle East. We have said that again and again, that we don't work with the oil and gas division within Aramco, but with the system integration arm of Aramco.
Does what he said there underscore what you're trying to explain here?
I think so. I mean, there's certainly employees at Google have been very vocal about this, as have employees in Amazon and Microsoft. And in some ways, if you're just a Google shareholder, you might think, well, I want them to be more active in the industry. Like, there's a lot of money in the oil and gas sector right now, whether that's their regular sort of production and exploration businesses, and even some of this, Chevron and BP and these big majors have talked about a big game about investing a lot of money in renewable energy. And so I think in some ways Google is sort of in behind in this sector, whether or not that's because they intentionally sort of put one arm behind their back as far as limiting their work. But I do think that's a tension. But it doesn't seem to be slowing down Microsoft and Amazon. And in their defense, they're saying that these oil companies wouldn't be able to move into the renewables and clean energy as quickly without us.
Interesting. All right. Well, we'll continue to watch your coverage on this. Bloomberg's Mark Birkin. Thank you. Well, the Inflation Reduction Act will lower drug costs as well. I want to bring in Jason Kelly now, the CEO of the biotech firm Ginkgo Bioworks, to discuss. So, Jason, how does this bill being signed into law impact your corner of the biotech universe?
Yeah, so there's actually two recent bills. So there's the CHIPS and Science Act and then the Inflation Reduction Act. Both of them are relevant in biotech. So on the Inflation Reduction Act, you saw these 45Q tax credits being expanded. That's really to create a growing market for carbon capture. And I think biology, if you look out the window right now, you will see plants out there pulling CO2 out of the air and fixing it. And so biology we see as one of the few really scalable technologies for doing carbon capture. But I think the CHIPS bill actually is just as important from my standpoint.
Why do you think it's so important?
Yeah, so if you look in that bill, I think two things are critical. So one, I think you see the U.S. sort of kind of getting our mojo back when it comes to industrial policy and the government saying, hey, this sort of technology is important for us to have onshore. Actually at Ginkgo, we just acquired a company out in California, or announced that we're going to acquire a company in California called Zymergen. This is to really build on the foundry technology we have at Ginkgo. My view is we want to be doing that so that we're not doing a biochips bill, 20 years from now and having to bring that back onshore. These types of growth of these biofoundries here in the U.S., I think, is important, and you see that reflected in the bill. It directs a National Engineering Biology R&D initiative where OSTP is supposed to direct NSF and DOE and DOD to spend on this, and then also that has the OSTP establish a national genomic sequencing strategy. So you actually see bio in the bill alongside chips. So I think it's it's a good signal by the government that these types of technologies are critical for the U.S.
You've become a sort of regular voice for us through the pandemic. What are the biggest post-pandemic storylines in biotech right now that aren't being talked about enough?
Yeah, so I think the big one is going to be certain types of technologies that got built out during the pandemic are going to stick around for ongoing prevention. So we actually just announced yesterday morning it's up to $61 million contract with the Centers for Disease Control here in the U.S. to do monitoring on an ongoing basis at airports in the U.S. Where we basically collect samples from planes that come in internationally and then sequence the DNA to look for new variants. And this program we did as a pilot with the CDC caught the first cases of BA2 and BA3 in the US that were sequenced. Well, now the CDC is funding this up to have it stick around. I mean, to me, this type of thing eventually will be kind of like a smoke detector, right? We should be on the lookout for infectious disease. And that's a change, I think, that has happened because of COVID, but will stick around after COVID.
Are we prepared to go back to school? As a parent, I feel like there are still conflicting messages about masks, no masks. testing? Like, what are the rules supposed to be?
Yeah, so CDC did just update some guidance on this. So I think where we're headed towards is I think you're going to see the CDC starting to reflect a little more how people have been operating. I think you're going to see seeing relief in some of the things like the distancing rules and mask wearing, making it easier where if you've had an exposure, you don't need to quarantine. Now, just to be clear, if you have COVID, you still need to quarantine, right? So I think there's been some misinterpretation a little bit on that. So if you're positive for COVID, you should quarantine. But for folks that have been exposed, you don't need to. That's going to help a lot in terms of having classes full. I think the regular monitoring, which we do in, as 10 or 15 states across the country, where you're doing weekly testing in a group, this actually allows for schools to stay open, right? Because you can identify, if there's a positive case in a class, you can pick it out, send that one student home to quarantine, but not the whole class, and then prevent big outbreaks in schools, which I think if we let it just kind of rip, you will see a lot of that type of disruption, in various places. And so I think you'll end up seeing monitoring stay, masking go, distancing go, and then the big wild card is there some new variant that flips that all on its head? And that's certainly still in the range of possibilities.
Well, on that note, do you think there will be a universal COVID vaccine in the future, or no, because, the virus is just going to keep changing?
So, I think you will see the virus keep changing. I think people are working on this. There's ways to get at it. In the scope of biotech, over the next 10, 20 years, I think will get dramatically better at this. But obviously we've been fighting flu and we do updated vaccines annually. I think you'll see things like that in the near term, but folks are definitely working on that. And so, we can hope, but I'd say in the near term, it's more likely to be just updated versions of the vaccine.
All right, well, we can hope indeed. Ginkgo Bioworks CEO Jason Kelly, always good to have you. Jason, thanks for stopping by. All right, coming up, why is Jesse Powell still so bullish on Bitcoin? More on that and wider institutional sentiment on crypto next. This is Bloomberg.
Yeah, it's hard to know with the private markets. Obviously we're not tracking the price on a minute by minute basis like the public markets are. So it's really hard to know. We haven't been out raising capital. We've got a very long runway of cash in the bank. We're profitable. So we don't need to go do another financing anytime soon. I think we'll probably wait for the market to improve before we do another round.
It is time now for our crypto report, and that was Kraken CEO Jesse Powell talking about what he thinks of the current crypto bear market in an interview earlier on Bloomberg's Crypto Show with Kaylee Lyons. Let's talk about it more with our own crypto contributor, Sonali Basak. Sonali, give us an update on the crypto markets and whether Jesse Powell is right by just waiting it out.
Well, Jesse Powell had bought in more at about 18,000, and you saw Bitcoin did reach 25,000 for a bit this month. It has come down below 24,000 again. So where does that leave us, Emily? It doesn't leave us at the price that he thought it would hit last year. Do you remember he told you and me that Bitcoin would be worth a Lamborghini? But even though it has not hit that price, you do see it about half the price it was at this time last year, but double where it was 2 years ago. It'll be interesting to see the market kind of sort out the natural price of Bitcoin as we make it through another cycle. Wanted to also point out Ethereum on the month because you do see a gain on the month. You do see the price rising because of that anticipation of the merge. But in more recent days, that excitement has worn off just a little bit. You have it rolling around 18,077 right now. It did peak above 2,000 this month with that anticipation of the merge. I know we're going to talk a little bit more about that next.
All right, Sonali, stick with us. I want to talk about this more and how Bitcoin startups are trying to secure capital as the crypto winter continues. Are investors buying the industry back up? Are they staying cautious? Let's talk about that with Elise Killeen, founder and managing partner of Stillmark. So, Elise, are you on the bullish side like Jesse Powell or somewhere else on the spectrum?
We're very bullish, both about Bitcoin, the asset, and the underlying protocol. And we have to be because entrepreneurial activity has never been more robust. In fact, we've seen a pickup in sort of the tests that people are willing to take during this period. When the market is more quiet, when we're in a bear market and there's less consumer activity, it's a great time to both dig into the metrics that you've produced in bull market times, as well as to experiment. And that's what we're seeing now from top founders.
What do you make of the merge? Because you saw this news coming out about Coinbase really looking to pause transactions in and around the merge. Clearly, there's going to be some technical difficulties around it as people try to scam others. That was a warning that they sent out. What are you thinking will be the near-term issues, and what is the long-term prospect?
Well, Coinbase is note that they're pausing deposits and withdrawals for ETH. I think is something that's expected, but it points out to us the trade-offs of using a centralized exchange to hold your cryptocurrency. Of course, there's some opportunities in using a custodian, but the advantage is to people using self-custody that they themselves set the rules for how they use their Bitcoin or their ETH or other forms of crypto assets. Now, looking ahead to ETH 2.0, I think that we know that there's risks and that the Ethereum community is hoping that there's great reward. But one of the things to look out for is the centralizing forces of moving from proof of work to proof of stake. Of course, we know that the majority of ETH staked, the vast majority of ETH staked, is ETH belonging to these large institutions. And so those folks, of course, are exposed to US regulators and have been tested very recently with OFAC coming out against Tornado Cash. And these same institutions that comprise the majority of staked ETH, in fact, are those that have complied within days to OFAC's sanction of Tornado Cash.
I'm so glad you brought up Tornado Cash, because earlier today, Jesse Powell did say that the shutdown was unconstitutional. I'm wondering how you see this debate really playing out in the market, the good, the bad, and what behaviors might not be accepted among these companies moving forward.
It's hard to know what regulators are going to do, but it's easy to know how centralized institutions are going to respond. They're going to comply. And that's the value, of course, of decentralization. So we know that Bitcoin leads with decentralization. What that means is that when looking at how the protocol is secured, Bitcoin finds it most important to make sure that the protocol is secured in a decentralized fashion and that any individual user can do two things. One, they can validate the code. Bitcoin's core protocol and its payments network protocol are open source. Users can know the rules, the software rules of these systems. But number two, users can participate in validating the accuracy of the ledger themselves. That's something that's much easier to do in Bitcoin than in other protocols. And one of the reasons it's important to be able to do that is sort of being demonstrated by the news of the last couple of weeks and the implications of government's imposition of regulations, for instance, regulations to prevent things like money laundering. We're seeing that happen now with Tornado Cash. And we know that some of the most critical services in the Ethereum space have felt the need to comply and have quickly done so, making users that have received, even passively, transactions from Tornado Cash sort of lose access to services that they depended on.
Elise, I recently sat down with Coinbase COO Emily Chang to talk about their partnership with BlackRock. Take a listen to what she had to say.
I have wanted to do that BlackRock partnership since the day I joined Coinbase. So for this to come together now, actually, during the crypto winter is such an incredible testament to where we are, where they are, where their customers are. And I think the most important point is it speaks to institutional customers, very traditional institutional customers, wanting to get crypto asset exposure.
She said to expect more partnerships like this, but every day there are more bumps in the crypto road. You know, how is this all impacting? Give us the temperature of investor sentiment, institutional sentiment.
So the BlackRock and Coinbase partnership will launch Bitcoin only. What BlackRock is doing is allowing its institutional investors to participate, to buy Bitcoin and to trade Bitcoin via Coinbase while still using BlackRock's software for management and for risk analysis. This, I think, was a response. We see it as a clear response to the demand of the very traditional institutions that are served by BlackRock. Now, what's important to note here is that providing a new on-ramp in a familiar environment and with familiar tools is likely to act as a very significant catalyst for institutional adoption. I want to flip this for a moment, though, Emily, and say that while we're seeing traditional institutions adopt Bitcoin, like BlackRock, we know that some of the most significant and important adoption of Bitcoin and of Bitcoin's payments network is happening in emerging markets. And so these two forms of adoption are happening simultaneously, and I think add to sort of the fundamental value of Bitcoin that Jesse from Kraken spoke to earlier.
Elise Killeen, Stillmark Capital, thank you so much for sharing your views with us today, as well as our own Sonali Basak. Okay, coming up, is the FTC harassing Jeff Bezos? That's what Amazon claims. We'll have more on why next. This is Bloomberg. Amazon is fighting back against the FTC. In a filing made public on Monday, Amazon claims that FTC staff have made unduly burdensome demands on the e-commerce giant as it keeps investigating its subscription services. Here for more on this, Bloomberg's Emily Birnbaum with us now. And Amazon also claiming that the FTC is harassing Jeff Bezos. How so?
Yeah, so in this filing made public yesterday, Amazon claims that the FTC has been overreaching in their ongoing consumer protection investigation into Amazon subscription services. So that includes Prime, and it's actually expanded to include Audible, Kindle, and some other of Amazon's services. So the FTC issued what's called civil investigative demands, which are essentially subpoenas to 20 former and current Amazon employees. They served them at their houses, and that includes Jeff Bezos and Andy Jassy, the two top executives at Amazon. And they say it was unnecessary to give them to Jassy and Bezos. These are about a lot of different parts of the business. These are the highest level executives. There's nothing, this is what Amazon says. They say there's nothing that Jassy and Bezos can give you that you can't get from documents and lower level executives.
Is this unusual?
It's actually extremely unusual in how confrontational it is. What's typical is that companies will always fight to narrow down subpoenas and civil investigative demands that they get from the government. But what's atypical is how public this is, how aggressive they are in their rhetoric, calling this very unusual, perplexing, and asking the FTC to pare it down in such a public way.
Remind us why the FTC is investigating Amazon and the status of this case.
So the FTC has been investigating Amazon for several years now. It actually began under the Trump administration when they were given the power to investigate Amazon over antitrust concerns. It's gotten broader since then. This particular investigation that we're talking about is a consumer protection investigation into whether Amazon makes it too difficult for consumers to opt out of Amazon Prime or other subscription services. But this is only one part of a sweeping investigation that looks at all parts of Amazon's business, including cloud, including streaming.
So when could we expect this to draw to some sort of conclusion?
The filing says that the FTC intends to make a decision about whether to sue Amazon over the subscription issue by the fall. This is probably going to prolong it, so it's probably going to take more time than that, a couple of months. But what's clear from the filing is FTC staff are under a lot of pressure by the commissioners, including FTC Chair Lina Khan, to get something done by the end of the year.
All right, well, we'll continue to follow your reporting on this. Bloomberg's Emily Birnbaum for us in Washington. Thank you. And so that does it for this edition of Bloomberg Technology. Wednesday, we've got ARM CEO Renee Haas joining us about the chip landscape and the latest with their possible IPO. And don't forget to check out our podcast wherever you get your podcast. You can find it on the terminal, online, Apple, Spotify, iHeartRadio, and more. I'm Emily Chang in San Francisco. This is Bloomberg.